and welcome. You're watching the newsroom right here on ET Now. I am Ajay Sharma. The markets are coming back nicely. At least they are not as nervous as they appeared, say, a couple of days back ahead of this very big event. A lot of traders are choosing to sit on the sidelines and observe which way things actually swing as far as US election go, and then they will take a call on what to do with their positions. But meanwhile, we are clearly seeing banks coming back. At the day's high right now, 1.25 is what benchmarks are trading at. Shiv Sehgal of Edelweiss is here with us to help us understand the market setup right now. Shiv, this is a big event. We've always seen rise in volatility ahead of this event, but this time, surprisingly, things are calmer. Or do you think that weakness and whatever had to come had already happened, and hence things look calmer now?
Hi Ajay, thanks for having me on the show firstly. But I think your opening statement was probably very apt. You know, it's a very defining moment in the next couple of hours in terms of the US elections, right? So it seems the world global markets predominantly in a very large holding pattern. You know, we saw some recent volatility going into month end in October, which can be expected, you know, as we approach one of the second half of this year's biggest event in terms of both politics and geopolitics. And it's no surprise that most investors, you know, are awaiting clarity on the US election and whether the incumbent wins or Biden can kind of, you know, come on top. But as you said, it seems most investors are pretty much on the sidelines. We have seen that when we are speaking to investors as well. And in terms of just the US elections, as you know, most of your viewers would be aware, most recent polls published, you know, in the last couple of days paint a very relatively consistent picture, with Biden holding a strong national lead, and it's been consistent for the past 1 or 2 months, and a smaller but still a solid one among the key battlegrounds as well. And what's interesting to vote, you know, as I mentioned when I was on your show last time, was that this is the first time we'll have, you know, a large majority voting in terms of mail-in ballots. And if you see the data that's emerged from the polling respondents, it's kind of very clear as of yesterday evening, almost 95 million Americans had cast their election already. And if you compare those numbers to 2016, you know, that's 70% of the total votes cast in 2016, which was about 136.5 million. So most polls are predicting that about 160 million Americans will come out. And, you know, that to me is a very good turnout, you know, this time around. And, you know, in terms of just the markets, yes, I think there is little doubt among, you know, most market participants that the worst case scenario for markets would be a contested result, which a lot of market pundits have been talking about. And as I also mentioned previously, you know, markets hate uncertainty. So that inherently breeds more volatility. So it'll be interesting to see how, you know, the geopolitical world or the political landscape looks in the US in the next 24 to 48 hours. Whether we'll have a result this time around tomorrow or we'll still be waiting is a big question mark. For India, you know, what really matters is our expectations from either of the government that wins, bottom line. You know, so if I were to look at markets, I would be looking at whoever the incumbent is the winner. You know, are the favorable US trade policies for India intact, right? Or do we see a more favorable stance from the new president if there may be a new election? The other point is, which I think is pretty much priced in markets, is that Federal Reserve's low interest policy will continue, and you know that will help India in terms of, you know, inflow of cheap capital into Indian markets. And the last, you know, is the geopolitical support with the broader standoff that we have seen with China and our neighboring countries, and a more favorable visa policy as well. And that to me would be the more you know, highlights that I would be watching from the new government that gets elected in the US, and how that you know, impacts India as well.
Shiv, you know, there's a sense among some of the FIIs. I was just talking to Rupal Bansali of Aerial Investments, and she was telling me that one would like to be very cautious right now. The case for a W-shaped recovery is higher than K-shaped and V-shaped, as some are talking about. And if indeed a market go into a risk-off mode, it's better to be in high dividend yield / pharma healthcare space. Because of the shape of the recovery, the incremental data points will start going patchy once again, because COVID risk still is on the table. If indeed that hypothesis plays out, how would you, suppose she was your client right now and would be having this conversation with you, what kind of portfolio positioning would you, recommend to a cautious large FII?
So, that's a very interesting data point. If you look at, apart from the US politics, right, the COVID is the other major area of macro focus, and the additional European countries imposing mitigation restrictions over the last couple of days, and it's actually broader Europe. It's Italy, Spain, France, Germany, and UK all combating a surge in the cases. And this was talked about, in peak of summer as well, where more scientists came out and said that the second wave is more likely as the developed world approaches or northern continent approaches winter. And we are clearly seeing that emerge in the last couple of days, which is putting a dampener on global growth. But as I would say that although vaccine hopes are acting somewhat as an offset as well, and while markets reacted negatively in the initial spurt when cases, I think UK is going to come up with a more restrictive, stringent policy in Thursday as well. But so far, markets remain quite sanguine and quite hopeful in terms of the broader policies. And let me put things in perspective. One, for India, the reality is that the major macroeconomic standpoints. Yes, August was a bit light, but September and October, the data points coming out, the GST collections, the manufacturing PMI that came out yesterday in India with 58.9 is almost at a decade high. So these are data points, and our channel checks when our analysts are speaking to corporates and different suppliers. The rural economy in India over the last couple of weeks has held up, or the months has really surprised. So I would say that at the Nadir in March and April, while people were very I would say pessimistic, things didn't actually play out that bad. And as we are getting hopeful, I would say that a lot is kind of priced in the market as well. But as we get clarity in the next couple of days in terms of the biggest political event, I think the world may look a lot different. And don't forget that either way, as I said, what has stalled markets is also the fact that the stimulus measures in the US have, the talks have kind of been in stalemate since September. And as we approach clarity in the US elections, I think by end November or mid-December, the stimulus measures that would come out from the US, whether it's 1 trillion, 1.5 trillion or 2 trillion, there's also talk that if Biden wins both the presidential election and the Senate, the number could be as high as 5 trillion. That would be a big kicker, not only to the US, but the emerging markets that we've been talking about as well. And in terms of that perspective, like in terms of emerging markets, if you look at where FI has been putting money, India and China are the only two markets in the entire Asia Pacific region that have positive inflows for year to date. India has seen about 6.5 billion inflows. And coming to your question on portfolio positioning, I think most companies this time in earnings, the earnings season is still going on. Most companies have surprised positively on that revenue as well as EBITDA front. Also, what's encouraging is the management commentary, where the focus is incrementally shifting from in March, April, May it was all about cutting costs, but now they're all targeting growth. And if you look at the beats to miss ratio, 50% of the companies in corporate India have beaten their profit estimates by more than 5%, and almost 25% have reported in line or better numbers. And the disappointment has only been in about 20% of the market. So to me, the data points coming out of cements, there have been a tremendous management commentaries there over the next couple of months as well. The fact that private banks have showed tremendous resilience. Yes, banks have underperformed, but I think post clarity from US elections and the data points coming out of India COVID cases has also been on a positive trajectory. Negating the fact that the winter in India doesn't see a similar jump as the developed north continent is seeing, I think the worst is behind us. And let's not forget the fact that corporate India today is far better prepared and than they were in March, April, and they have been shifting their stance and putting structures in place and policies in place to mitigate the pandemic effect. And we are seeing that in this earnings season. So we remain quite robust that the worst is behind, and the data points coming out of the rural economy, and even the October data points in terms of real estate transactions picking up, even in urban cities, all these are green shoot elements that are indicating that markets will remain on an upward trajectory. And as I had mentioned previously, that to me the real test for demand in India would be as we approach Diwali. The pent-up demand cycle has already played out, but the commentary coming out of most corporate India is actually quite robust. So I think the festive season is actually going to be quite a positive surprise.
All right, Shiv, thanks very much for your time. Great having you on the channel. Before we take a break, let's hear out Bandhan Bank management after the results, the kind of commentary they're sharing for outlook ahead.
If you see that my collection